Today's number is 200 because one of Wall Street's favorite indicators, the 200 moving average, is now showing signs of weakness for both technology stocks and financials at the same time. And this doesn't tend to happen very often when you don't see a breakdown in markets. Although they're selling off, we still have major key supports at levels such as 6,600 and 6,500. But why is it then that we need to be paying attention to what's going on with yields, inflation concerns, and of course, even Bitcoin? Join us today in Pepperstone's Macro Edge, where we go through some of the lead charts and what you might need to be thinking about some of them. See you soon, guys. Well, welcome back, everybody, to Pepperstone's Macro Edge. My name's Thomas Atkinson, and today we're taking a look at everything in terms of the flows and, of course, what Wall Street could be up to in the big movements around the markets. We'll kick things off by having a look at the S&P 500 because that is one of the big charts at the moment. And whenever you get a VIX, that is the volatility markets, going higher, you have to be paying attention to these particular charts. Why? Well, the S&P 500 is made up of the broadest and biggest market in the world. And therefore, if it's starting to perform poorly, we need to start to look for where are the supports and where are the resistances. Now, when we look at a chart such as the S&P 500 right now, it's pretty clear to see that there is a very key zone coming up. And that's because around that 65 to 6,600, we may have a potential support zone where previous bidding has come through. To make matters more interesting as well around this is that we are starting to see a bit of a decline in breadth. And this is the first time we've had that really in almost over a year, with breadth continuing to show improvements in recent times until really only a few weeks ago. So let's actually dial in on the smaller timeframes here and take a look at the futures action to kind of break down some of the key levels that we're seeing. One of those is the series of lower highs, creating a trend line on the top side, which may break out at around 6,800. And of course, the other one is the 6,600 zone. And we have actually put a anchored VWAP behind the high here and found that the market has just found some resistance around there at the 6,700 area. So it's clear that we're still seeing a series of lower lows and lower highs on the smaller time frame as the markets have broken down, and this may become a very important level over the next couple of days. But what about the lead indicators? Are we starting to see signs of weakness in some of those? Well, first up, let's have a look at high beta versus low beta. And it's pretty clear that this market is starting to show some issues there as well. Basically, if we see high beta rocketing up, that often tells us that we're in the beginning of a significant breadth phase, which might just be the start of a significant rally. We saw something similar happen during the tariff tantrum and something similar happen during the 2020 crash into rally. Now that it's starting to decline, though, we have to look at potential turn points. And one of those could be coming up as we see markets start to weaken into levels such as the 149 here. It's only one of the reads, though. We've also got the US dollar, which has been incredibly strong recently and bucking a lot of people's trend. We often say if it's in the press, it's in the price. And one of the reasons we mention that is because we have a series of lower lows here coming through and everyone went really negative on dollar, saying cash is trash and no one wants to be in it. Everyone wants to be in gold, silver, and other things. And although they have performed incredibly well, all of a sudden during these geopolitical tensions, we've seen the dollar come back up to that 130 marker. So a very important critical resistance. Now, if it does break out of here, could this be a Wyckoff? It probably is one of the more important charts at this point because it will go hand in hand also with inflation concerns. So we'll need to be looking at things such as junk bonds and what's happening with those, high yield junk here. And we'll also be wanting to look at 2-year yields and the likes of those. And the reason is because if they break to the upside, which they already have started to, it could show either stagflation or some kind of significant inflation coming back into these markets, causing a lot of concerns for macro traders out there. And these are the kind of things that we want to be looking at. But I'd say the dollar for now is a very important resistance. And if it breaks up here, it could potentially expose levels such as the 100 kind of 50 on the charts, which is right back up there with where we were in March of last year. Now, is this unheard of? No, it actually happened similarly to this in some ways during 2018, where we saw the dollar get crushed, everyone turned negative on it, and then it started to rally back up after basing for a while. So you have to always go with, could things happen? Yes. Did we hit a massive trend line? Absolutely. And if you're looking at a massive trend line in the future, one of the key lines to have on your charts for the dollar index is going to be this one coming through the lows. So effectively a critical level here, and you can see the market's barely held onto it, but that's why it makes it such an important level, such an important break. Let's now take a look at the rest of the markets. Semiconductors are holding up for now. We've done a semiconductor versus SPY combo here. And the reason we do that is we want to see whether the backbone, basically the modern day Dow theory, that is our semiconductors actually holding a little bit better. And for now, it hasn't made a lower low. Key level to look at in the future will be 0.55. And of course, if that breaks down, it could mean there's potential weakness coming. Nvidia, meanwhile, stuck between multiple zones, 170, 195. Nothing really going on from Nvidia, but in the news, we saw Jensen Huang actually come out and say that he believes revenue could double to $1 trillion. And they're thinking about putting AI in space. Yes, that is data centers in space because it might be cheaper to cool them. This is the type of thing that often does happen when people get a little bit too confident and stuff. What do you guys think, though, in the comments down below? Is that a sign of the times? Is that a sign of a bubbling market when people start talking about putting data centers in space? Not saying they can't, but when that actually starts to happen. And also, what would happen if we did put a lot of those in space and they were floating around? Could we even get a spaceship out in the future? All these things we'll have to consider. So at the start of the video, we talked about the idea that technology stocks are starting to weaken, and also financials have done so at the same time. And we have seen this kind of thing happen before, with both financials falling off and technology stocks starting to decline at a faster rate than the stock market back in that 2007 period, just before the global financial crisis. Now, this is for the daily 200 moving average, and it does kind of start to stoke the ideas of, are we seeing a similar style market when it comes to risk starting to appear? One of the big things that we've often looked at when it comes to risk is things like gold. Has gold gone up a lot coming into this potential problem? Well, yes, it has, and at the moment it's kind of in the no, it's a very tough zone, I guess, to look at on the charts. But gold and silver have been doing incredibly well over the last 12 months, and that's something that often does occur at a later cycle in the markets. So let's take a look at XLF, for example, here, and we'll break down one of the big things that's happened over the last week, which is that basically we saw financials not only drop lower lows, because that did happen, but also get through under the secret demand here on the left-hand side. And that kind of marks a big point, because if you look at things like Goldman Sachs in the market, it's been down quite a lot, actually entering into what many people call a technical bear market, which is when you go from the top to the bottom over 20%. That actually has happened. And most of these markets are now sitting on key levels of support. So Goldman Sachs is actually at its big fixed range volume profile most traded zone. And if you look at Wells Fargo, you can see here that it is actually at its massive trend line level. So again, two major banks here in the US, both on significant levels, coming into this current support potential for the S&P. And it really does kind of start to show that there is two tails to this market. There are certain things that are going well, such as energy stocks, and there are certain metals, and there are certain things that are going poorly, such as the financial markets. So there are some issues there, you would have to say, that are starting to appear in debt, particularly over private equity debt, because we did see that BlackRock, Morgan Stanley, Wells Fargo, some of the others, it looks like there's limitations to how much liquidation people are able to do. And when things like that happen, it often means that there's a little bit of illiquidity in those markets. And this is something we do see from time to time, and we have to be paying attention. When it comes to the NASDAQ, the key level is going to be 24,000 in the future in terms of it's a critical level of support. And we can see here that it's got real levels of previous buy demand. If it breaks below here, it could expose what we call a double top pattern, and that could create what we also see as a waterfall effect. That is a market that starts to get a little bit more volatile. So watch that one on the charts. Some other things to watch here. Tesla, you can see the 20 moving average on the way down. Pretty interesting how the 20 has been held on the way down in terms of resistance selling, but that will be something that, of course, we'll be watching. And also, it's interesting to see the markets that are doing a little bit better, with the Chinese market, HSI here, actually finding support on that key technical zone of 25,000 that we've spoken a few times about on the charts, and finding some bid, at least initially here, with a little bit of a change of trend when it comes to the market. It's a low, a high, a lower low, and a higher high, signaling that the markets are starting to show some potential keenness around this level. So certainly an interesting one to watch. We've also seen similar things happen in two other areas. One has been software. Software has picked up in recent times, and you can see here that if we go to the weekly, it's been at a very critical level of support as well, with some pickup. And if we actually load Bitcoin on top of this, there's a really interesting phenomenon that's been happening in recent times, which is that both Bitcoin and software have been kind of syncing to a degree with each other. So little wonder that Bitcoin has also started to see some signs of improvement. Speaking of the crypto markets, we've had a breakup in Ethereum over the last couple of sessions, and that could expose what we call a kind of a channel trade or a double bottom trade, in terms of, you can see these are what technically looks like the completion for something like that. Again, these are not guarantees or anything. This is just interesting levels that we're looking at. And Bitcoin, you can see here, breaking to the upside after taking that high of 72,000, pulling back, which was a little bit nasty, and then of course now rallying. Could it get to 79, 80,000? That's the next kind of major supply or resistance zone on the charts. As always, guys, one of the things that we're looking at in the markets right now is really that the breadth is starting to decline. We've got debt starting to show signs of concern and illiquidity. And of course, we have a VIX that has really spiked up. With hype coming into AI from the point of view of Jensen actually saying that they might double revenue from NVIDIA, but that not even really holding in aftermarkets, it really goes to show that sentiment can switch just like this. So whenever we're looking at markets, we always want to be considering, what the volatility is looking like. The VIX here, of course, went up to 30 and has been crushed back down. It is kind of normal for the VIX to get crushed and then sometimes for us to have a second kind of bounce. So you might want to go through and do some VIX studies and have a look at how that kind of stuff works. But in general, I guess this market is still very volatile. We have geopolitical situation that is incredibly volatile, and that means that, of course, risk management is key in these markets. Thanks so much for watching Pepperstone's Macro Edge, and we hope you enjoyed it. We'll see you in the next one. Bye for now.